Yep, I can see on YouTube.
Good afternoon, everyone. Welcome to the second town hall in the proposed restructuring of ZI Private Limited. My name is George. I'm a director with the Crow team that's currently advising the management of ZI. On the town hall with us, we have Jason Kardachi. He's a managing director from the Crow team, who is running this engagement. And we have co-founder of the WazirX platform, Michelle Shetty. Thank you for making the time to dial into our second town hall. The first town hall was held a couple of weeks ago, and that's where we gave a high-level introduction into the proposed restructuring of ZI Private Limited. At this second town hall, we aim to provide more information in respect of this proposed restructuring and go into detail to explain the draft restructuring proposal that was filed in the second affidavit of Michelle Shetty in the High Court of Singapore on a moratorium application. We'll go through a short set of slides which detail the proposed restructuring, explains the draft restructuring proposal, and dives into the worked example for the rebalancing and distribution mechanics that we expect to be implementing during this proposed restructuring. And following that, we will have some time for live Q&A. Broadly speaking, we would like to keep this discussion to approximately 2 hours, and we will be letting creditors of ZI, who are also users of the WazirX platform, one or two at a time, into the Zoom call from the waiting room to have their questions answered live by myself, Jason, and Michelle. We ask for your cooperation in this process, given the significant numbers of creditors and level of interest in this restructuring, and we hope to be able to bring to you answers to address your most burning questions. Shall we kick off? Let me just give a high-level explanation in respect of the contents. So we'll start off with an executive summary and a bit of a comparison on why we want to do a restructuring versus the alternative. We then have a helpful slide for future reference on definitions, commonly used terms in this restructuring, and which you can refer to once we provide the slides to you as a user of WazirX and creditor of ZI. Then we'll go into some detail on the assets, liabilities, and the cost fund, detailed in the draft restructuring proposal, followed by our efforts to improve recoveries to creditors beyond the tokens that we have available right now. Lastly, a bit of a flowchart on the rebalancing and managed wind down, and then a detailed worked example that takes us step by step through how this process will work. And lastly, we'll open up to a live Q&A, and we'll be able to answer your questions in person. So now I'm going to hand over to Jason Kardachi to take the executive summary and the why restructure section.
Thanks, George, and hi, everyone. Thanks for joining us, and hopefully we can give some clarity to your questions and the process here. ZI is undergoing a restructuring where we need to address the 45% asset deficit relative to the liabilities that was caused by the cyber attack on the 18th of July. This restructuring is the fastest, fairest, creditor-approved, and legally binding resolution to resolve these crypto balances. ZI has assets of $301 million US, 284 million of which is liquid available assets in the form of crypto. And there's 17.7 million in illiquid assets. It's token and fiat. It's not presently within Zeti's control. The liabilities are 546.5 million. So there's not enough assets available after the hack to repay all of the liabilities. So it's 55% is available, 52% in liquid assets, and another 3% in the illiquid assets. So there's a 45% asset deficit. This restructuring is aimed at fairly and equitably distributing these assets to creditors, working on recovery of the hacked stolen tokens, and to share any available profits that can be generated in coming years with creditors. The liquid assets will be distributed to creditors in tokens, importantly, and not fiat, and of your choice. We will give you that opportunity to choose your crypto shortly. Illiquid assets and the stolen tokens from the cyber attack we are working to recover, and if we can, then they will also be distributed. We're in discussions with numerous white knights at the moment, we're working on various collaboration opportunities to generate more profits that we would then share with creditors in coming years. We'd like to restart the business, and again, from the profits generated there, share that with creditors. We're working on a potential secondary debt market to see if we can provide an option there for creditors who really need liquidity and can't wait the 6 months or thereabouts that it will take to complete this restructuring. So we plan to rebalance the assets that we have. They're currently not in sync with the liabilities, and give you a choice about what token you would want to receive distributions in, and which will give you exposure for the period that you're waiting for that distribution. The creditors ultimately will receive then an equitable distribution, same as everybody else, in the token of your choice, for 55%, 52% in liquid, immediately available, and 3% in the liquid, which will be distributed as and when we can receive those funds. That's in US dollar terms. In a bull run, creditors will get all of that upside. And if there is a bull run and crypto that you choose goes up substantially, you can get more than 100 cents back in US dollar terms. We, Zeti, will not be retaining any of the upside. Here is a summary of why a restructuring is the best available option here. The same descriptions that I used: fastest, fairest, creditor approved, legally binding, choice and upside are the categories we're using here, and talking about why the restructuring is a superior choice. This restructuring will take 6 months at least. It is approved by the Singapore court. It's therefore subject to the court's timetable, and that is the major reason why it will take that period of time. I'll go through the restructuring first and then not restructuring. It's fair. Everybody's treated equally, and they will receive a proportionate share of the assets as the contingent unsecured creditors of Zeti. There's transparency. There will be detailed information provided to the court and to all creditors. There will be frequent updates like this and town halls where you can ask questions. Creditors have to approve any restructuring. We're going to need more than 50% in number and 75% in value of those present and voting to vote in favour of the scheme that is proposed. This will be legally binding when it is approved by creditors and by the Singapore court. Creditors will get to choose the token that they wish to receive distributions in. And for the period after their choice until we can distribute, the 6 months or thereabouts of the restructuring, the market exposure that will be yours for gain or otherwise. So the upside, if the market does go up in a bull run, then any of that upside will be available to you. Zatide will receive none of that. And then there's the business and the other collaboration efforts that we're talking about with White Knights. The intention will be to maintain the business, enter into other collaborations if possible, and generate profits that can be shared with creditors. If there's not to be a restructuring, then users are going to have to wait for the outcome of the dispute that is ongoing with Binance. That will then determine who owns the platform and who is responsible for these crypto balances. This is going to take a substantial period of time, and there's uncertainty around the outcome there. We cannot disclose more than that. These are confidential litigation proceedings, so we are not, unfortunately, in a position to talk more about that dispute at the moment. But it would be difficult for liquidation proceedings to occur whilst that dispute is ongoing. Liquidations, particularly in crypto world, take a long time, often years, and they are often expensive and lengthy processes. Fairness in liquidation, users will be treated as unsecured creditors of the platform and receive a proportionate share of the assets, not the actual tokens. So effectively, there would be no difference in the treatment of users in a liquidation or in this scheme. So in liquidation, all users will share the impact that was caused by the unfortunate cyber attack. Liquidator is appointed to run such a liquidation. He may consult with the committee of inspection, but creditors do not get a vote and do not get to influence the conduct of the administration. Liquidator can run a liquidation as he sees fit. It is legally binding. He is empowered by the court to do so, but he's not necessarily obliged to consider any preferences of creditors in how this is conducted, whether it's paid out in fiat, whether it's paid out in crypto, how the adjudication is processed and KYC, the time taken to do those sorts of activities. They are matters for the liquidator to determine himself or with the input of the court. Choice. In liquidation, users don't get to choose what tokens you receive. You will get a pro rata distribution. Often in liquidations, there have been distributions made in fiat, not in token form. Users would not get any choice in the upside in how these assets are held until they are distributed. That will be a decision for the liquidator. If they are made in fiat, then any benefit of that upside from bull run would not necessarily be available to creditors. In the liquidation, the businesses of the platform would not operate, and any White Knight discussions would not be available to share in any profits there. So we think there are many simple and compelling reasons for why this is the quickest and the fairest way to resolve this situation for the benefit of everybody. We know it's not ideal. It's an unfortunate position that we're all in, but we are working to achieve the best result for all users here in the quickest and the cheapest and the most efficient and fairest way. And we strongly believe that what we're putting forward to you now is the way forward to do that.
Thanks, Jason. What we have next is a section on definitions, and this can be used as a handy reference following the provision of the slides after the town hall. It will help users understand the key terms that we use in this restructuring, and we urge that users refer to this slide when understanding the rest of the deck. However, for now, we're going to move past this, and I'm going to talk about the draft restructuring proposal that was put forward in the second affidavit. The next three slides talk about the assets, the liabilities, and the cost fund as detailed in the draft restructuring proposal. The assets are going to be valued using the latest market prices from third-party sources such as CoinMarketCap at the latest possible time. Currently, there are about 284 million of liquid assets which are under ZTI's control. ZTI has control over these assets and can transact them. And there's a remaining 17.7 million USD of illiquid assets which are not under ZTI's control and will require realization efforts. So until these illiquid assets are realized and converted into liquid assets, where ZTI is not able to run any form of transactions or rebalancing in respect of these illiquid assets. Now, the graphic on screen describes what's included in the assets and what's excluded. Broadly speaking, what's included will be, firstly, the remaining token balances associated with claims, which comprise the liquid and illiquid assets, a total of about 301 million USD. Any stolen tokens that are recovered as a result of tracing exercises, any tokens generated from profit sharing mechanisms, and any tokens generated from collaborations with White Knights. What is excluded is on the left side of the screen in red. Firstly, any tokens that are held on trust or trust creditors, and currently we have identified 8 law enforcement agencies with 28 million US dollars worth of tokens that fall under this category. These are held on trust. They are not unsecured claims, and they'll be excluded from the restructuring. Ring-fence tokens refer to any tokens set aside to address any further trust or proprietary claims from ongoing legal proceedings. And these tokens will be returned to the asset pool if no proprietary claim is determined. And once they are returned, they will be made available for distribution to creditors of ZTI. Any profits. So profits associated with the platform in previous years are currently subject to the dispute with Binance. They are presently under dispute and are excluded from the scheme. However, these can be included under the scheme and distributed to creditors subject to the outcome of that dispute and is presently under further assessment. Lastly, the cost fund, which are tokens assets set aside to address the cost of the restructuring, and I will go into more detail shortly. The liabilities arise from the user crypto balances of both individual and corporate platform users, and each of these users are contingent unsecured creditors of ZTI according to the T's and C's, and thus are subject to restructuring under the scheme. It's worth re-emphasizing that the token balances on the platform that are subject to trust arrangements and held by trust creditors will be excluded from the scheme. Please note, and this is an important concept within the restructuring, a claim is denominated in US dollars as valued at 18 July 2024 and is not denominated in token. Now we have a vast user base of platform users, approximately 4.3 million platform users who are contingent unsecured creditors. And the intention is to set up a committee of creditors for consultative purposes so that ZTI and Crow will be able to understand firsthand via an in-depth consultative process the preferences of the creditor base. I'd like to direct your attention to the bottom right-hand corner of the screen with a bar chart. On the left side of that is the 546.5 million USD of claims. And on the right side of that would be the assets. 284 million of liquid assets in dark blue, 17.7 million of illiquid assets in green, and that last bit at the top, light blue, that represent the 45% gap in assets versus liabilities, which was what Jason was referring to when he talked about the 45% asset deficit in the executive summary. Here's a description of the cost fund, which involves segregating and ring-fencing 12 million US dollars of tokens, which will be used to carry out a fast and efficient restructuring that delivers improved credit recoveries to creditors of ZTI. This figure is based on our current estimates However, we are continually striving to improve the efficiency of the process, and any realized savings from the actual cost relative to forecast will be redistributed to creditors. Broadly, the cost fund aims to fund the cost of operations, the cost of restructuring, the cost of legal proceedings, and the cost of recovery and realization of illiquid assets as stolen tokens. Now, from left to right, the operational costs aim to maintain the platform infrastructure and keep it staffed, which will allow it to support an efficient restructuring. And it will also maintain a technical capability to collaborate with White Knights to improve creditor recoveries. And lastly, to ensure that the platform is capable of reactivating the WazirX crypto exchange and P2P operations, which will allow further profit sharing with creditors to improve recoveries. In the next silo, cost of restructuring. I'd like to emphasize that this restructuring is one of very large scale with approximately 4.3 million creditors, which means that there's a significant volume of creditor outreach, effort to reach out to creditors, communicate with them, understand their preferences, and structure the terms of the scheme to align with the key priorities of creditors and ensure the successful passing of a scheme. Legal costs of the scheme process will also be important, given that the scheme is a scheme of arrangement is a corporate rescue framework under the Singapore court, which will require significant legal input as part of the process. Significant resources and time are also being used to work with White Knights to deliver improved recoveries to creditors. Restructuring plan development, commercial input and strategic planning is a key factor in developing, commercializing, and generating a restructuring plan that works for creditors to vote on. Proof of debt adjudication, voting on the scheme, and appointment of a third-party independent assessor to verify disputes and voting results are all key to ensuring that the scheme progresses along the legally mandated timeline process that protects creditors' interests, ensure that debt is appropriately adjudicated and factored into voting, and ensuring that any disputes and voting results are adequately verified by an independent party. All in all, the cost of restructuring is an essential aspect to run an efficient and very large-scale restructuring for 4.3 million creditors. Moving on, the cost of legal proceedings are unfortunately very much under confidentiality at this stage, and we are not able to provide more information. However, we remain committed to progressing the scheme alongside these legal proceedings, which will be key in clarifying the position of the ownership of the platform. Lastly, the cost of recovery and realizations, which include the cost of blockchain tracing, cost of forensic reports, which will set out the strategy for asset recovery and likelihood of recovery, the cost of actually pursuing and recovering the stolen tokens in line with this strategy, and lastly, the cost of realizing contingent illiquid assets. All these costs are necessary to improve creditor recoveries by recovering stolen assets and realizing contingent illiquid assets, all of which add to the distributions that creditors will receive. Lastly, we'd like to re-emphasize that everyone on this team, Zetai, Crow, everyone that's involved here is very much committed to using this cost fund efficiently to run a fast and efficient restructuring that improves creditor recoveries. The next two slides talk about how we improve recoveries and liquidity. The White Knight process on the left side of the screen involves continually working with the 11 White Knight candidates that we have already identified, and while identifying any more that may be potentially interested, to discuss financing, collaboration, and partnerships. And while there is an ongoing dispute with Binance, which makes certain structure of transactions challenging without Binance's involvement, it's still very much possible to engage very substantively with these potential White Knights to improve creditor recoveries. Some ideas that we have had and we are actively progressing with the White Knights would be the direct provision of funds, collaboration on revenue-generating solutions, enabling trading withdrawals or deposits, tokenizing or making possible secondary sale of claims, and potentially even the creation of a creditor rescue fund to assist creditors who urgently need financial assistance. This white-knight process aims to improve recoveries and liquidity, and on the right side of the screen is an avenue that Zeti is pursuing to help with the creation of a secondary market for Zeti claims, which will facilitate the release of early liquidity to creditors who need it. Under this plan, we'll be pursuing a partnership with reputable funds who are willing to purchase claims from creditors on the secondary market. This can allow creditors who very much need the liquidity to actually sell their claims before the scheme and allow them to exit the scheme with some liquidity in advance of the actual sanction of the scheme of arrangement. Zeti aims to collaborate with these funds to reduce the cost of selling the claim. And once you reduce the cost of selling a claim, this effectively means that the funds will be able to buy claims from a lower threshold, making the secondary market available to more creditors, and will be able to offer a higher recovery relative to if the costs had not been streamlined. All in all, these savings will be passed on to creditors to improve their recoveries if they choose to sell their claims. The way we are intending to work with these funds will be to integrate KYC processes and necessary creditor database updates, or to standardize and likely to standardize the claim assignment documentation required to sell a claim. Revenue generating solutions on the left side of the platform involve plans to reactivate the existing WazirX business, which is currently suspended, both the crypto exchange and the P2P business, and have the revenue once more generated from transaction and withdrawal fees. We're also exploring new revenue generating solutions like a decentralized exchange and potentially self-custodial wallet infrastructure that's currently undergoing legal and commercial assessments. We can use these profits from the reactivation of the business and any new revenue generating solutions and share them with creditors under a successful scheme, with the caveat that the profit sharing is subject to Zeti being deemed the owner of the WazirX platform following the resolution of the ongoing dispute with Binance. Lastly, the ongoing steps being taken to trace and recover the stolen tokens, with a blockchain forensics report currently underway, which will set out the likelihood of the recovery of these tokens and recommendations for next steps on how to actually recover the stolen tokens. And right now, the report is being processed. However, as an indicative direction, potentially the plan may include informing parties to freeze and return stolen tokens, or to burn stolen tokens and remint them in Zeti's favor where technically feasible. We can also have the option of pursuing legal proceedings against parties responsible for or involved in the events leading up to the cyber attack, and ongoing cooperation with ongoing investigations and enforcement efforts by the various law enforcement agencies that are also investigating the cyber attack. The forensics report is presently under preparation and will be provided to both the Singapore court and to all creditors when it is complete, to provide more clarity on the situation and provide context on the efforts to date that have gone into tracing and attempting to realize these stolen tokens. Now, what you see on screen will be a bit of a timeline in respect of next steps under restructuring, which includes a distribution token denomination, rebalancing of liquid assets, and distributions of rebalanced liquid assets. Let's start from left to right. A distribution token denomination is as simple as creditors being able to choose what token denominations they want to receive distributions in. As an example, if creditors want to receive their distributions in BTC, Zeti will make distributions in BTC to this creditor. In choosing a token, creditors can choose which tokens they want market exposure to, because the next step is actually the rebalancing of liquid assets. Basically, ensuring that Zeti has the correct balances of tokens on the asset side to make the distributions to creditors in the tokens that they choose. And this allows Zeti to lock in each specific token recoveries for each tokens. Once the liquid assets have been rebalanced, and there will be a worked example later, each creditor will receive their pro rata share of the rebalanced liquid assets. Effectively, each creditor will have a share of total claims, which is calculated by dividing a creditor's claim with the sum of all creditors' claims. Now, because the USD recovery rates will vary due to the crypto price volatility, token recovery rates will be locked in at the time of rebalancing, and creditors will receive distributions of liquid assets rebalanced for them in the tokens and not fiat. What this means is that when we distribute the rebalanced tokens to creditors in the token that they chose, any price increases on those distributed tokens will go directly to the creditor. Creditors will benefit from price increases on these tokens. This also means that in the event of a bull run, creditors will receive all the upside from the bull run. Basically, subject to the bull run being significant enough, creditors can get more than 100% USD recovery from distributed tokens. Zeti will not get any upside from a bull run because creditors will be receiving the tokens distributed. There's also a section down at the bottom of the screen about subsequent rebalancing. As we can only rebalance liquid assets that are under Zeti's control, we're not able to rebalance stolen tokens that have not been recovered and illiquid contingent assets that have not been realized. However, upon the recovery or realization of any of these assets, they will be converted from illiquid to liquid, which means that they too can be rebalanced. So they will be rebalanced, and subsequent distributions will be made in line with the process just described above. This section of the presentation involves a discussion of a worked example, which is also in the draft restructuring proposal submitted to the Singapore court. Before we jump into the example, I'd like to caveat that this example uses certain assumptions that are purely indicative and illustrative of the restructuring methodology. The way that we're doing it is set out in this worked example. However, at a high level, things like the number of creditors, the total assets, the total liabilities, all of these are very much indicative examples, as are the token prices. So this worked example should be followed to understand the methodology and how we are intending to carry out the rebalancing and distribution. Before I jump into the detail, I'd like to just clarify the structure of the worked example. On the left side of the screen would be a bit more of a wordy presentation, which sets out in detail for creditors who want to jump into the detail subsequently, the underlying numbers, whereas on the right side of the screen is a more pictorial representation, which may be easier for creditors to follow. For the purposes of this example, I will be presenting using the right side of the screen to make this example more accessible to more creditors. However, following the second town hall, a set of these slides will be provided to you to get into more detail on the left side of the screen as needed. So this work example assumes that there are only two creditors, just purely for illustrative and simplicity purposes. Creditor A, who has platform balances of 1,000 BTC and 100,000 ETH with a total claim value of 375 million US dollars. This claim value is derived from a valuation of the platform balances as at 18 July. Creditor B is the only other creditor, and his platform balances comprise 55,000 ETH. His claim, which is denominated in US dollars, is worth 171 million US dollars. So together, they add up to total claims of about 546 million US dollars. Now, as this is an indicative example, this number does not sync up precisely to the overall claims in the restructuring. However, we did endeavor to sync it up as closely as possible for illustrative purposes. Now, in the section below that, in green boxes, that represents the assets of Zeti. Zeta currently holds, as an illustrative example, 1,000 Bitcoin and 55,000 ETH. These assets are valued at the present time to give you the latest value of assets that can be applied to claims. So the value of assets here will summed to a total of 302 million US dollars, and dividing that by 546 million US dollars of claims arrived at the 55% USD recovery as described earlier. This slide aims to demonstrate every creditor getting to choose what token denominations they want to receive, which is the distribution token denomination. Here's an example. At the top right-hand corner of the screen, creditor A, who has 1,000 BTC or platform balances and 100,000 ETH tokens in his WazirX platform, chooses to receive all distributions in BTC. What we do here is basically find the equivalent number of BTC that is worth the same amount as the platform balances as at 18th July. As you can tell, the claims do not change. Basically, 1,000 BTC plus 100,000 ETH as at 18th July is equals to 5,859 BTC. Claims remain as 375 million. Claims do not change. Meanwhile, creditor B, who has 55,000 ETH in his platform balances, chooses to receive distributions in ETH. Basically, he wants to receive it in the same tokens that he currently has in his platform balances with no change made, unlike creditor A. What this means is that he has a distribution token denomination balance at the bottom right-hand corner of the screen of 55,000 ETH, and claims, as before, don't change. He still has claims of 171 million US dollars. In total, if you add up the claims, as claims do not change, they remain in total at 546 million US dollars. Now, it should be noted that this distribution token denomination balance is not what creditors will receive. It is merely the equivalent of their platform token balances as at 18th July, converted into the tokens that they want to receive distributions in. Because there are not enough assets to repay all claims, creditors will receive a percentage of these distribution token denomination balances, which I will go into in more detail in subsequent slides. Step 3 would be rebalancing. So what is rebalancing? Referring to the right side of the screen, there's a red box there, and I would like to direct your attention to the first row of the red box. Effectively, in pre-rebalancing assets, basically assets that we have now, we have 20% of value stuck in BTC and 80% of value stuck in ETH. Meanwhile, as a result of creditors' choices choosing what tokens they want to receive, the distribution token denomination balances have 69% of value in BTC and 31% of value in ETH. This situation is not balanced. Under this current situation, Zeta is not able to ascertain how much BTC needs to be set aside to repay creditors who have chosen to receive distributions in BTC, and similarly will not be able to understand how much ETH to set aside to repay creditors who chose to receive distributions in ETH. The only way to understand this is to carry out a rebalancing via market transactions of assets. And this arrives at the blue box below. Basically, assets will have 69% of value in BTC and 31% of value in ETH, an exactly balanced approach to the way that value is distributed in the distribution token denomination balances. This is a balanced approach, which allows Zeta to lock in token recovery percentages and understand how much BTC to set aside for creditors who want to receive BTC, such as creditor A, and how much ETH to set aside to distribute to creditors who want to receive it in ETH, such as creditor B. The rebalancing will lock in a specific token recovery percentage, which basically is calculated by understanding how many rebalanced Bitcoins we have on the asset side, divided by how many Bitcoins need to be are in the distribution token denomination balances, in this case held by creditor A. Following the rebalancing, we have 3.5k BTC on assets, and creditor A has a distribution token denomination balance of 5859 BTC. Dividing those two gets you a 59% BTC token recovery, effectively meaning that Zeti will hold and distribute 0.59 BTC of assets for every 1 BTC that the creditors have opted to receive distributions in. The same logic can also be applied to ETH, which is at the bottom right-hand corner of the screen. Effectively, we will have rebalanced 39,000 ETH in assets against 55,000 ETH in distribution token denomination balances belonging to creditor B. Dividing one by the other gets you a 71% ETH token recovery. Zeti will, as a result of rebalancing, hold and distribute 0.71 ETH from assets for every 1 ETH that creditors have opted to receive distributions in. I would like to now direct your attention to the bottom left-hand corner of the screen, where the bright blue box is. As a result of this rebalancing, we actually arrive at a 55% USD recovery, regardless of whether a creditor chooses to receive distributions in BTC or ETH. What this means is that all creditors will receive a 55% USD recovery at the point of rebalancing, making it equitable for all creditors, regardless of whether creditor A chooses BTC or ETC, BTC or ETH, or creditor B chooses BTC or ETH. A very wordy slide here, but broadly what this means is that all rebalanced assets worth 302 million will be distributed to all creditors. Creditor A gets his 3,457 BTC against his distribution token denomination balance of 5859 BTC, and that's the 59% BTC token recovery. Whereas creditor B gets a distribution of 39,000 ETH against a distribution token denomination balance of 55,000 ETH, representing that 71% token recovery on ETH that I referred to earlier. I'd like to direct your attention to the second table on the slide with the blue box. As you can see, converting the value of these token of the distributions to both creditors A and B, and comparing it against the claim value of creditors A and B, gets you to effectively a 55% USD recovery, which is equitable for all creditors. And this 55% is at the point of rebalancing based on the present pricing. Not the easiest to visualize, which is why we have this slide. The top half of the slide refers to creditor A, and the bottom half of the slide refers to creditor B. The red boxes in the first column refer to the distribution token denomination balance and the value in USD representing their claims, whereas the green boxes represent how much in each token each creditor receives from distributions, whereas the blue boxes refer to the percentage recovery in token, which is the first box, and in USD, which is the second box. As you can tell, while there are different percentage recoveries for each token, which is a function of the rebalancing and the prices of each token relative to the distribution of value in claims. Effectively, creditors A and B, referring to the right side of the screen, get the same USD percentage recovery at 55% at the point of rebalancing, making this a fair and equitable USD recovery outcome. That said, tokens are distributed, distributions are distributed in tokens. They're not distributed in USD, which means that creditor A gets 3,457 BTC and creditor B gets 39,000 ETH. And as you know, the volatility of crypto is such that there are increases and decreases in the prices of these tokens. and making the distribution in tokens according to the choices of creditors in receiving specific tokens allows creditors to take on exposure to the movement in the market, which means that if prices go up, creditors A and B can get improved USD recoveries because they receive the BTC, which is now worth more. So what happens if the token prices increase? Let's say we have a bull run and BTC goes from 60K to USD 60K to USD 100K, representing a 66% increase. Meanwhile, ETH goes from US 2.4K to US 3.6K, representing a 50% increase. Creditors A and B still get 3457 BTC and 39,000 ETH respectively. The tokens don't change. However, the value of the tokens do change. Effectively, creditor A will get a 66% upside on the 55% upside that he started that all creditors started with, while creditor B will get a 50% upside on the 55% upside that all creditors started with. I refer you to the chart on the right side of the screen. Effectively, everyone starts with 55%, and those are the bars in green. But as a result of the token prices increasing, potentially, assuming a 66% increase on the value of BTC, creditor A's BTC is worth 66% more. So that 66% multiplied by the base 55% gets a 37% USD upside from this distribution for creditor A. Meanwhile, creditor B was distributed ETH, which went up in price by 50%, which increases his USD percentage recovery by 50% multiplied by the base 55%, resulting in a 28% USD upside. In such an event, if a bull run is significant enough, creditors can actually receive more than 100% USD recovery from distributions made in tokens under the proposed restructuring. And for avoidance of doubt, all upside from this proposed rebalancing and distribution will go to creditors. None of the upside is captured by ZI, which means that creditors get the full market exposure to the tokens of their choice. Now, before we go any further, I would just like to clarify that certain considerations here. As we know, crypto prices can go up and it can also go down. Crypto is highly volatile, and for this reason, we urge creditors to consider clearly the level of market exposure that they are willing to take on. While the slide demonstrates the outcome of a bull run, potentially crypto prices can go down as well, which means that the 55% base recovery is only effective at the time of rebalancing. And should the price come down afterwards, creditors will also receive a lower than 55% recovery should the price decrease relative to the time of rebalancing. Now, we believe that having exposure to the crypto markets is particularly important to a wide range of creditors, which is why we are making this option available, as potentially it gives creditors the ability to moderate and adjust their exposure to the market and ensure that if there's upside to be captured, they are in a position to do so while the scheme progresses through its timeline. Now, this is the last slide, and it's about why the proposed restructuring works. Broadly speaking, the distribution token denomination exercise lets creditors choose what tokens they want to receive the distributions in. At the same time, it allows creditors to choose what tokens they want to have market exposure to. All creditors will be able to choose, and you're not locked into any one specific token until the end of this exercise. The rebalancing section locks in a fixed per token recovery percentage, which allows Zeta to hold a fixed balance number of tokens relative to the distribution token denomination balances. We can then say that we are holding a certain number of BTC for creditors who want to receive BTC. Now, any token price changes now do not affect the creditors unfairly because they are able to take the market exposure and benefit from the tokens that have been rebalanced for them. And lastly, creditors will receive their share of the tokens that have been balanced for them in the tokens that they chose to have market exposure to. This lets creditors retain the ability to take on market exposure and potentially increase their USD recoveries from the scheme. Now, the upside belongs solely to creditors and is fair and equitable. Creditors get all the benefit of increases to token prices, and ZI does not retain any of the upside. With creditors can potentially get significantly higher USD recoveries, or even more than 100% USD recoveries if there's a significant bull run. And very importantly, this is fair and equitable because, firstly, all creditors get to choose what tokens they want to have market exposure to. And all creditors start from the same equal 55% USD recovery at the time of the rebalancing. This makes the process fair and equitable while giving the creditors the flexibility to adjust their token choice to align with their personal expectations and aims. Thank you for your time. This has been a fairly comprehensive example. We strongly urge creditors to refer to the slides, particularly the detailed sections if they so wish, to understand the mechanics behind this. And ZI is working on what we would call a simulation, effectively a calculator, which will help further explain the mechanics behind the distribution token denomination, rebalancing, and distribution. And we expect to get this to creditors shortly to help creditors understand better. We have come to the end of the presentation, and before we move on to the live Q&A, I would like to set the scene here. Given the very large creditor base and significant interest in participation, we appreciate if creditors can bear with us while we let creditors into the waiting room one at a time, one or two at a time, so that we can answer questions answer questions live, directly, and in an efficient way, which will hopefully allow as many creditors to ask their questions as possible. Each creditor will be allowed about 2 minutes to ask their questions and have them answered. And after the questions have been answered, the creditors will be removed from the Zoom call to let the next 1 or 2 creditors in to ask their questions. We appreciate your cooperation in this process, and please understand that we'll be holding subsequent town halls as well. If you don't manage to ask your questions here at this town hall, you can continue to submit questions to the WazirX team, and we will continue to update the FAQs and address questions on subsequent town halls. With that, thank you very much. And shall we let the first 1 or 2 individuals in to ask their questions, please?
Hello.
Hi, Ratik. Is that how we pronounce your name?
Yes, yes,
Hi, Ratik. How are you?
I'm fine. So
Yeah,
can
go
I
ahead,
ask?
sir.
Yeah. So I wanted to know, like, are you guys not planning any immediate crypto withdrawal as of now? Hello.
Yeah, we can hear you, Ratik.
Yes, yes.
No, unfortunately, we're not able to allow any withdrawals now until the creditors do agree to the restructuring proposal, and that's going to take around 6 months. We
Okay, and one
are
more thing. Okay.
sorry,
And
we are working on potentially introducing secondary purchases of claims for some people that really need liquidity before the restructuring is agreed, that may provide an option.
okay. And currently, there are people from World. You must be knowing, like last year, you guys did for them also. They are claiming that you guys are giving 30% of the funds to them in like 2 years. So will the case be same for WazirX also? By promising 55, you give only 20% in 2 years.
No, no, it's very, very different, Ratik. In Vold, we had a different amount of liquid assets to deal with. And, we've been very clear here. The liquid assets available at the moment is 52%,
Okay.
55% with the illiquid assets. Vold
Hmm.
was, we have distributed all of the available liquid assets we could, but it had a much heavier emphasis on illiquid assets that take more time.
Okay. And regarding the issue with Binance, you guys are telling that you have some investors in line with you, but the issue with Binance won't be solved. So how will any investor put money in WazirX?
Um, we're looking at different collaborations with potential investors that want to, do business with us. I mean,
Mhm.
you're right, they can't buy WazirX, or we can't issue
Mhm.
equity, but we can do business collaborations with them where they can introduce products to our customers and we can hope to generate profits that way. And Nishal, I'm not sure if you'd like to add to that.
Yeah, I think you hinted at it. Uh, uh, it's obvious what is not possible because ZI does not own the platform. But the idea is, can there be a way for White Knights to come in and probably do a direct collaboration with the users of the platform? And that's the direction that we are looking at. We've got some ideas, and once they hash out and it's more concrete, I think we'll float it around with everyone and get your feedback.
Okay, thank you. That's all my queries. Thank you.
Shall we let in the next person, please? And let's let in a couple so that we can move this process along more quickly, please.
Hi, Yasir, you're in the room.
Yes, I'm in the room. Am I audible?
Yes, you are, sir.
Good evening.
Good evening.
My question is directed to Nishal. Mr. Nishal Shetty, I want to ask you about the INRs. If you have taken the snapshot of the date of 18th July, that is 1 p.m. So why did you held the INR of those people who deposited on 19th July? That is post snapshot date. Technically, it should not have been frozen or held 34% that you held. I'm talking about the people who deposited who deposited INR post hack. That is post snapshot date. Snapshot date. I hope you got my question.
Yeah, I got your question, and this is something that we are actually currently talking to the legal team that advises Anmai for the INR part, and but we completely hear you, and I think we've got this feedback. We're trying to see from a legal point of view what's the right approach, and as soon as we get advice, we'll share that with everyone. But right now, it's just we're waiting on the right advice and the right approach for that.
Thank you so much.
Yeah.
Hi, Rakesh. Can you hear us?
Rakesh, you're on mute. Or is he not able to unmute himself? Can we also let a few other people in?
Rakesh, we have sent you a request. Please unmute yourself and ask a question.
Yeah. But also send a few more people in, so we can do this faster. Yeah, Rakesh, we can hear you.
Sir, I just wanted to know when is it possible to withdraw my crypto?
Rakesh, we anticipate making a distribution as soon as the scheme can be approved, which we think is 6 months or thereabouts from now. You would be able to
Okay.
withdraw the 52 to 55% of your crypto.
Okay, sir. Okay. Thank you very much, sir. I believe this. Thank you.
Thank you, Rakesh.
Thank you, Rakesh. I think Raghavendra has joined.
Hi, Raghavendra. You're on mute. If you unmute yourself, we can answer any questions you may have.
Raghavendra, we have sent you a request. Please unmute yourself.
Okay, am I mute?
Yes, we can hear you, sir.
We can hear you.
Okay, so Nishan, I'm not sure if you have already answered the 34% of INR who has deposited before 18th, right? So we were not expecting the hack to happen. So what about us? It is unfortunate that it happened, but INR we deposited without knowing any risk. So when can we expect the 34% INR to be unlocked? What would be the timeline? How much long, or when would we get the next update?
Yeah, the timelines are a little uncertain because there are some legal proceedings, and we don't have an ETA on that. Having said that, we are trying our best to get it released. The funds are frozen in the bank account, and we are trying our best to get it released. But unfortunately, the way legal proceedings operate, we don't have like a fixed timeline. So it's very hard for us to predict. But be rest assured, we've been on top of that, and we are trying to push even further, given the current situation.
Is it going to take same time as the restructuring, or can we expect before, or is it going to happen only after that?
No, it's unrelated. It's a parallel process. So, the restructuring is happening in Singapore with ZI, and the INR is on Zanmaya, the India entity, and it's a different reason why the funds are frozen. So it's in parallel. But yeah, we don't have a definite timeline because we've not been given that. Or usually in these situations, you never get the actual. There's never a deadline or a timeline. But the only thing we can do is try our best to push for it, and that's what we're trying.
With this INR, is Zetai allowed to do any trading on behalf of us, or are you guys? It is completely frozen. It is not being used by anyone.
It's not being used. It's frozen, so you can't move it.
Okay.
Lakshya, do you want to ask a question, please? Vignesh Waran. You can ask a question if you have one.
Actually, I also have the same question about 34% of INR. I got the answer.
Okay, thank you, sir.
Lakshay or Pankaj, you can unmute and ask a question.
I've just joined, so I'm not sure whether this question was asked earlier or not. I just wanted to understand, WazirX has been functioning since a long time, and you guys have had good run with the Indian crypto industry as well, and have got good profits as well. So why are you not using the profits to actually reimburse the customers and give the money back? I'm not saying that give back the 100%, but even if that means giving back 70% or 80% of it, why don't we do that?
Nishal, do you want to take that one?
Yeah, sure. I think and we've specified this in our previous responses as well. We had sold the platform in 2019, and it's been our stand ever since. And Zeti did not really, make profits or revenue from there after the sale. The dispute right now continues, and the question is, what's going to be the outcome of the dispute? And based on that, the owner of the platform can decide. But as of now, our stand is clear that in 2019 we sold the platform, and we've not been the owners of the platform, which means the profits don't accrue to Zeti, and that's the reason. Unfortunately, I can't go too deep into this because of the ongoing dispute.
Nishal, just a follow-up question on that. So when you say that there is an ongoing dispute between you and Binance over the ownership of the platform, so why did you actually function in the Indian market before actually settling that dispute? Don't you think you are actually putting the customers at risk in case of such a scenario which has already happened now?
WazirX was launched in 2018, and we were the ones who launched it. And the acquisition happened in 2019. The dispute publicly came in 2022. So it's not really a black and white situation. The platform was operational ever since 2018, and things were going the way they were supposed to till the dispute started in between. And it was publicized, publicly. There was a lot of, I would say, questions and answers and stuff. So it's not like a straightforward thing about do A and then do B. A lot of things happen in parallel, and the question was, how do you maintain the status quo? And it was while you solve this.
So your platform was hacked on July 18th, right? Till July 17th, whatever profits were happening on your platform, who was receiving those profits? Was it you or Zeti or Binance? Just a simple question.
Not Zeti.
So it was going to Binance?
Look, I can only speak for Zeti, so it's not Zeti.
Yeah, and just questions like that, guys. Pankaj, it's a confidential, the dispute in the proceedings, and we can only say so much. Alwyn and/or Manish, unmute and ask away.
Hey, thank you so much for letting us in. A couple of questions. First thing is, I have two questions actually. Okay, so since I have my 2 minutes, I would like to use the 2 minutes completely to ask these questions. Okay, my first question is, why can't you release the 55% now? It's hacked. You have the money. You know you have the money. You should release it now. You ran a poll asking that how many users are going to settle for the 55% now. You did not show the spine, Nishchal, to basically settle that money now. Why did you not do that? Okay, my second question to you is, why did you not step down as a CEO of WazirX when there was a dispute between Binance and you? It was your responsibility to take that ownership. If you call yourself a leader, it was your responsibility to step up to the plate and get that resolved now. Why did you not do it?
Alwyn, we're not able to distribute the funds until we get an agreement from creditors. You can appreciate it's impossible to get 4.3 million users to all vote definitively one way or another, and users have different views. So we do need a legally binding process so that creditors can have their say and vote in favour. That's the unfortunate reality that we can't pay it out today until we get either all 4.3 million users to say one thing, or to use a scheme where we can get 75% in value and 50% in number. And as soon as we get that, we will distribute the funds.
Okay, but the question, I mean, my question is directed to Nischal, Jason, with all respect, you know. And so I would like Nischal to answer this question. You did not conduct this poll before you signed up with Kroll or anybody else. Am I correct? Am I correct in saying that? Why did you go ahead and convince the community that you are willing to give 55% when you had no, how would I put this word properly? You know, you had no intention of actually giving back the funds at any point of time. You conducted the poll before you got Kroll or your other lawyers involved from Singapore. You ran that poll before that time. If I'm not wrong in that, I think there are many people who can back me up on that, right? But why did you promise the community that you would give that 55% before you got in your lawyers?
I think there's some confusion on this, and I had posted about this on Twitter as well. I think a lot of people were confused that when we ran that, it meant that we would enforce and distribute in the manner that and it was not a poll. We also clarified it was more to understand if the community was willing to go that way. And while we did get people who were supportive, but it was very clear from the resistance that we got, and the way that would have worked is only if everyone was in favor and there was some legally, I would say, correct manner in which we could have done it. But it soon became apparent that due to there was a lot of resistance, honestly, and there was a lot of pushback that we received, a lot of legal threats that we received, which made it very hard. But the intention was always that what's the fastest way in which we can do this while ensuring that legally, things are done in the right way. And the reason for that is, it's not always to just protect a particular party, but also to ensure that the speed that you talk about does really mean speed. And when I say that, what I mean is, if you were to do this without, let's say, a court-approved manner, there could be, some external factors or forces which could delay this process indefinitely, for a very long period. So it was important for us to, ultimately reach this stage, if you think about it, after we saw the kind of responses and, I would say pushback that we received, that let's take a format where if the majority agrees, you can actually effectively solve this without any external barriers to that process. And that's exactly what we're trying to achieve right now. And I'm thankful to the Kroll team coming in, stepping forward. They've done this before. They've been able to really push through things. I think some of the stage where we are at, traditionally it would take several more months if you think about it. And we've been really able to expedite this, and we've been able to reach here, thanks to their expertise. We've not had to have that. Crypto is so new. A lot of times, what happens is you bring in people, and then you spend a lot of time just explaining. But with the Kroll team, the best thing was they knew, they speak our language in terms of what is crypto. How does this happen? There are so many complications. It's not really a straightforward thing. So I think we've been moving really fast from a legally, I would say correct manner. And the objective is to really get to this as fast as possible. And we've been able to, remove all that onboarding delays in terms of educating people by going with a team like Kroll and even our legal teams who've got background and experience in doing something very similar. So yeah, we're trying our best to expedite, but the intention is definitely to make sure that the assets are distributed as soon as possible.
Thanks, Nishal. And maybe the second question is why you're continuing to act as CEO, when there was the dispute with Binance?
Yeah. So see, the thing is, I think first and foremost, the technicalities of that, I'm not really, I think it's been ever since the dispute or even before that, I've sort of not been, an employee running it. But the dispute, and there are just so many things in that. But it maintaining the status quo, for example, is one of the things that you need to do. So you can't just go around and change when there's a dispute like this. And that's exactly what we're doing. We're just maintaining the status quo so that when things are resolved, whoever the owner is can take it forward. So yeah, I understand these questions, but that's not how it works. We need to follow some procedures and processes, and that's exactly what we're trying to do.
Okay, Manish.
Hi, Jason. Good afternoon. Hi, Nishal. Hi, George. So, my question is regarding the a better understanding of the restructuring process. As you guys explained, like George explained us better regarding the potential upside that we are going to get through the restructuring process. That could be more than 100% in the USD terms, but actually, you have fixed liabilities as on 18th of July, the total platform liabilities, but the assets, the liquid and the illiquid assets were fixed at a later date. So can you explain why this happened? And the second thing is, like, if I'm holding one Ethereum on your platform, and as of 18 July it was valued at a value of $3,000 for one ether. So after your restructuring, as you told, you will be giving 55% of the USD value of that ether. That would be around $1,650. So at what date would you fix the denomination crypto distribution, like the price of that token, when you will be redistributing it to us? Like if it takes 6 months, so would you take the price for 6 months later token, or it would be fixed on 18 July? So that I just want clarity on this.
I'll take this one. Thank you, Manish. Great questions. In respect of the why 18 July for liabilities and why a different time for assets, is because 18 July represents an equitable cut-off for the valuation of the claims on against ZI due to the significant events, the cyber attack and the halting of withdrawals that affected all unsecured creditors of the platform equally. So that's where we fixed the liabilities. The intention was to identify a point that was fair for everyone, not just because when we're talking about crypto prices, at any given moment, a crypto price can benefit some and not benefit others, right? So it's not fair to fix on crypto prices, in fact, which is why we fixed it at an event that affected all creditors equally. So that's the liabilities. However, for tokens on the asset side, those are valued as at the latest possible dates. And the dates, the numbers and the dates that we're using for the presentations and the town halls are linked up to the dates that went into the moratorium application affidavit. And this is purely for illustrative purposes. In reality, the value of the assets will continue to move all the time, right? And the only way to rationalize the value of the assets and appropriately allocate the value of the assets fairly and equitably to every user of the platform is to carry out the rebalancing. It is only at the point of rebalancing that we can say that for your ETH, your one ETH in your platform account, we have rebalanced, and purely as an example, let's say 0.6 ETH, right, in token terms. And once that's rebalanced, and we are holding 0.6 ETH for your one ETH in your platform balances, when it's time to distribute, we will give you that 0.6 ETH. So if that 0.6 ETH goes up in value, you get a higher USD recovery out of this restructuring.
Okay, so I got your point, George, but there is one more confusion since like it is written in the blog post that like your returns on your assets could be greater than 100%. I completely got your point. Like in that case, when you are going to distribute zero point 0.6 ETH, just for an illustrative purpose for the 1 ETH that I have hold on platform. So will that I need to repurchase that, or you would be guys like you guys would be reallocating my like assets, or you would be first selling and then I had to repurchase at a later date when you are
There's
done
no
with the
there's no repurchase needed on your side, Manish.
okay.
So when we say that creditors can choose what tokens they want to receive distributions in, that's effectively you telling us I have what ETH in my platform balances,
Okay.
and maybe you want to receive BTC, right? Maybe. If you choose, if you want to receive BTC, for example, what we will do is we'll take your choice of how much your 1 ETH is worth in BTC terms as at 18 July, and we'll take the choices of all other creditors in this exercise, we'll put them together and understand how many tokens of each denomination we need to have on the asset side to be balanced. And from there, we will buy and sell from the existing balance of assets so that we hit that target balance of every token that we need to hold for the creditors who want to receive distributions in those tokens. So on your end, you are not doing any buying, you're not doing any selling. You are telling us what tokens you want to receive a distribution in. So is everyone else, and then we'll put it all together and we will transact that so we can secure the correct number of tokens to give back to you.
And George, if I like continue to hold what like I was holding before the hack, and if I wish to receive in the same token denominations, so I would be receiving a proportion of my current crypto holdings, right? That would be
Correct.
valued at 55% of the liabilities that I have to the platform.
That's correct.
Okay, so one significant question is how long would this entire process take? Like since you guys have like Nischal has filed for a 6 months moratorium application, how long would the restructuring will effectively take after the moratorium? Like can we expect it to be done by the period of 8 months or 12 months, or how longer it could take? That is what we want to ask because we are also there in liabilities, so there are some problems and we are not able to access our funds on time. So that's why it's an important question that I need to ask you.
It's a very important question, Manish. We are off to a fast start, as Nishal mentioned, and we're in court already. The only issue that puts at risk the 6 months is court timelines, really. And Christmas is coming in Singapore. The court closes down for a period, so
yeah,
you know we can't commit and say definitely this, definitely that. But 6 months is a reasonable estimate. 7 or 8 months maybe if court dates go against us. Or for example, if discussions with White Knights put something on the table and it takes us a bit longer to come to an agreement with people and then explain it to creditors, these are the sorts of things that cause delay. But yeah, it certainly should not be anywhere like 12 months. 6 to 8 months is a reasonable estimate. And it's the court's dates and complications in whatever deal we're putting forward to you. But, there's already quite a clear deal. And the things that we're talking about, and we talked about 52 cents in liquid plus 3 cents in illiquid. We're also trying to add to that, right? With a deal from a White Knight, with the profits that we can generate, hopefully we can increase that in token terms for you outside of whatever the market may or may not do. But yeah, 6 to 9 months, Manish, is a very fair estimate.
Okay.
And we are going at this as quickly as we can.
Thank you so much, George and Jason. My last question would be to Nischal. I would like Nischal to answer this question. So, Nischal, my question is like, since we have been, I started investing on WazirX in 2021, and I like also referred very of my friends to like join WazirX and start crypto trading. So, my question would be, we all have been trusted you so far, and we are there trusting you with all the legal process. We are there supporting you. Now my question is, since we have seen you guys doing profits and doing lots of expenses, I have seen your affidavits, both the supplementary affidavit and your primary affidavit as well. I would just want to ask you, what are you willing to put in from WazirX side to this hack, to increase the sufferings of the user? Since recently I've heard from initially first from you that you have done us surveillance from a review from Indian team that your systems were not compromised. Recently we got from a news from Liminal that they are also saying from Grant Thornton they have done a review that they were not compromised. So we just want to ask that what are you going to put in to minimize the pain of the users at this time? So can you please put some light on this, Nishal?
Sure. Thanks for the question, Manish. And I think a part of that, regarding, let's take, for example, the profits and stuff, I've already answered that. But, I hear you. And again, before I get to that, the report around, let's say, the devices, we can only speak for what we've done. And we're trying to do everything to make sure that, if whatever that is, I think the ultimate aim is to make sure that the point of failure is also known on, what happened, how it happened. And we are trying our best from our end. It definitely seems to be a far more complicated form of attack. And but we are not going to stop. We are going to try everything to make sure that we can finally understand what happened. And there's also authorities investigating. So all of that is happening. It takes time. And because there are also multiple parties involved, it's not a straightforward thing to analyze this. And so we are trying what we can. In terms of, what can we do above and beyond what we're doing? Now, we are trying to, go a step at a time. See, we've got limited bandwidth. We've got a team that can, do what it can, but we need to prioritize. And our first priority has always been, how do we get to a redistribution as soon as possible? So that's exactly what we're doing. We've also been working on the token recovery efforts. And, there's just so many things. As we progress, now we are working on the White Knights strategy. As we progress through these, because these are, I think, higher priority, I want to, try to sit with the team and try to figure out what else can we do to add more value to this, to our WazirX, let's say the WazirX tribe, the WazirX family that we have been working with for so many years. We've been there since 2018. We came not looking at a market that was, large, but at a market we believed we can work with together to grow. So we'll do our best, but we need time. There are higher priorities. If we get into what can we do extra above and beyond, but for that, first is what are the bare minimums that can be done, should be done, and in the fastest possible time. And that's exactly why, we are here where we are having this town hall. But yeah, this is not the end of it. You've seen we'll continue to progress, and we'll continue to try to figure out how else can we add value. But the value that already exists right now, which is the 55%, we need to find the fastest path to that, because everything else, and probably the White Knight, I think that those are the fastest. Everything else can always be added to reduce the gap further, but I think these are higher priority, and the token recoveries. So we are working on the high priorities, but it does not mean that this is all we'll do and nothing else we'll do. We are not giving up. We are not sitting aside, despite the dispute, despite the situation that we are in, despite it being very hard for us to, almost impossible to raise, let's say, equity when there is a dispute on ownership, or to, raise or to sell. We are trying to do what we can in the legally acceptable manner, and we'll continue to do that. If it also involves adding more value through different efforts from us, we'll even get to that. But we just need more time on that while we work on the high priority stuff. Vignesh, you want to ask a question?
Hi, yeah. Can you guys hear me?
Yeah.
Yes, we can.
Yeah, so my question, I'm just taking it a little bit in a different direction. So let's say July 18th is the price that you're pegging Bitcoin at, right? So roughly 64,500. And let's say I purchased a Bitcoin, like I purchased one Bitcoin in 2023 at $16,000, right? Based on what you guys are saying, let's say 0.5 becomes available. Let's say I had no intention of selling this, right? But unfortunately, on the distribution day, you might distribute 0.55 of at the value of 60,000, right? So who's responsible for the tax liability of that? Because I think when you redistribute the tokens, wouldn't that be a taxable event?
Good question, and we will do what we can to avoid that, Vignesh. So, in the alternative to this restructuring, if there were ultimately liquidation, I think you'll find that would be a taxable event. But in a restructuring, we're not distributing that token. We're just making it available to you at 50, 55 cents percent. So it wouldn't. We don't believe it would be a deemed distribution.
All right. I just have one follow-up question for that is like, let's say, because I'm trying to wrap my head around it, right? So let's say I don't have Bitcoin. I had some ERC20 token, right? Let's say I purchased $100 worth of that token. Right now, the current valuation wherever you guys have frozen it is $200, right? So I'm about $100 in profit. Now let's say that's an ERC20 token, but then I say that, hey, why don't you redistribute that in BTC? Again, I don't know how the Indian government is going to look at that. I think, wouldn't that be considered a sale and then a purchase of a new asset consequently?
Good questions. Obviously, you should get your own tax advice, but we would be happy to work with you and do anything that we can to help mitigate that risk.
I think I think the tax part is something let us also look deeper into that. So we are now as we go into the distribution side, I think this is a very important question, and we're going to bring clarity. Having said that, I think because of the way this is going to be structured, where you have the option to stick to what exists, so you could potentially not change your portfolio and just keep it the same. So think of it as locked today. You're going to get it unlocked without any changes because you choose the same set of tokens. So there are various ways to do the minimum impact way from from all of these things. But we don't have a specific answer from a taxation point of view. I think we'll need to, even for all of you, you'll need to consult your tax consultants. But we'll try to see if we can get something out. I think we'll definitely look into that.
Hello.
Yes, Dr. Bajrang.
Yes, sir. Yes. Am I audible?
Yes, you are, sir.
My question is, what are the chances of the moratorium being approved?
High.
Hello.
Yes, I think the chances of the moratorium being approved are high.
Okay. High. And if in the worst case, if it is not approved, then how much time it can take?
Dr. Bajrang, we are not able to hear you, but I think Jason, did you get the last part? What he's trying to say?
If in the worst case, if the moratorium is not approved, then how much time it can take to get back the crypto back to the users?
Yeah, sure. I mean, that's captured in the slides and what I was saying earlier. I mean, the alternative to this restructuring through the Singapore court is a resolution of the dispute with Binance. It would have to wait for that, and that could take a long time.
Indefinite time, you mean?
Yeah,
that can take indefinite time.
It's indefinite, yeah. Yeah.
Okay, and one more question, please. Now, suppose if I was having Solana, okay, that was not stolen. and after 5 to 6 months, if its price gets increased, then the profit will be credited to me, or only the price at the time of hack will be credited to me?
Okay.
Let me
Good
take that one, Jason.
Yeah, George. Okay.
Thanks for the question, Dr. Bajrang. Basically, if you held Solana and you continue to want to receive Solana from any distributions made under the restructuring, effectively what you would receive would be a number of rebalanced Solana tokens, subject to Solana as a token being supported by the restructuring. You'll receive a balance of Solana tokens following the rebalancing, which will lock in approximately.
So yes.
Yeah, approximately at this stage, that number will be about 52% worth of Solana in USD terms. And basically, you'll get, let's say you have one Solana, right? And
Okay.
following the rebalancing, you get 0.3 Solana, which gets you 55% USD recovery, just like every other creditor. That 0.3 Solana will be held for you. And once the restructuring is approved by creditors and sanctioned by the Singapore court, which we expect in about 6 to 9 months' time, we'll give you that 0.3 Solana. Now, if the price of Solana goes up, then that 0.3 Solana is worth more, and you get the upside of that. So what basically, as a result of the restructuring, you'll be able to take on the upside on that 0.3 Solana that we're rebalancing and holding for you and distributing for you.
May I speak?
Yes, Manvendra, just wait. Dr. Bajrang, does that? Oh, he's gone. Okay. Manvendra?
Yeah. Hi, team WazirX, team Troll. So before I get into my question, I had a comment basically in the moratorium that you filed. The time prescribed there being at least 6 months is as good as saying it's at least 1 day. Like anything beyond that is indefinite. It can take years, and it still lie within the framework, within the timeline of at least 6 months. So I just feel like to give assurance to people, it should be up to a maximum of these number of days or months or years, right? Like anything over 6 months is still within that prescribed timeline. It can be 10 years, it can be 5 years. It's still the same. So you could have just gone ahead with at least 1 day, and it's still fine. But now the question I wanted to ask is that WazirX, through its official handles, has publicly stated in the past that they have a reserve to a liability ratio of more than 1:1. Many smaller exchanges operating in India, younger ones, smaller ones, are maintaining reserve to liability ratios of 1 to 1.5. And then in the Singapore affidavits that you filed, we had a look at ZI's income statements, which clearly shows that they've been receiving transaction fees, other sources of income from the operation of WazirX platform, right? Like I think it was about 100 million for 23 or 22. And I believe Nishal categorically denied that ZI has not been receiving any of these payments. But it's in the public domain. It's in ZI's legal filings that they've been receiving transaction fees, withdrawal fees, things like those, and about 85 million of expenses, which has no note attached to it. We cannot see out of 100 million revenue, they've spent 85 million on marketing and sales. There's no classification of where that went. Now, I just wanted to ask you that given the reserve to liabilities ratio and the profits or the sources of income that WazirX has been generating or has access to,
why is it that the burden of this hack is only being passed down to users? WazirX is a platform that has more than $500 million of assets, and they're not willing to pitch in even 5 to 10% and expecting users to bear the brunt of the entire 45% hack. I don't understand how is this in any manner fair.
Thanks, Manvendra. Nishal, perhaps you can address that other part about the reserves and the profits. But Manvendra, I think I'd just like to clarify the point about the financial statements. So those financial statements are consolidated financial statements of Zetai and its subsidiaries. It's not just Zetai. And one of the Zetai subsidiaries is Zanmai. And the correct part of the income statement to refer to is not the section labeled as group, because group includes Zanmai as well, which is outside of the restructuring. The appropriate section to refer to would be the section under company, which represents the income attributable to Zetai only. And I think you will note that the vast majority of that revenue number that you cited earlier does not actually fall under Zetai. And because of ongoing confidentiality obligations, we're not able to say much more than that. However, we can confirm that Zetai, the 108 million, bulk of it does not fall under Zetai's books.
And I'll let Nishal address this, but Manvendra, all available equity or profits is being provided to creditors. But unfortunately, because of the dispute that there isn't an ability to contribute the historical profits, quite simply. So it's not Nishal's decision because of the ownership dispute. We can't say more than that, but everything that can be contributed is being contributed. We're looking to generate more through White Knights. All future earnings that we can generate will be provided.
Yeah, and I think the Zanmai part is because there's the INR side of the business, and Zanmai has been processing INR related deposits, withdrawals, and the trades in that. So that's separate from the crypto part of it, and that's where when I said the profits part, I meant about the crypto side of the business, which is what has been impacted. George, what was a part of the question? That
you've also publicly stated in the past, Nishal, that
the reserves part. Okay. Yeah. See, I think when we say 1:1 reserves, and the thing is, when you're operating the platform, there's a fee being charged on every trade, and the way it works, the surplus gets eventually. I mean, on the books it's separate, but when you do the POR, for example, and you list out your wallets, at any point there's always a fee component that's generated, which leads to the reserves not exactly representing only the user assets, but there's also some part of the excess, and that's what the POR means when you say it's 1:1, or more than 1:1. The excess amount that gets generated on, let's say, a minute by minute, daily, weekly, monthly basis, which is then subsequently used to operate the platform, in terms of the development of the platform, the expenses and costs. So when the POR reports are put out, the reason why it's stated the way it is to make sure that that is known to people, that the wallets are not only exactly 1:1, but it has a smaller surplus which gets generated on a regular basis as the platform operates. So that's the way it is put. I think it's been described in a different manner, and I understand why you're asking this question. I think a few people from my team also told me that this is being asked, or this is being put in a different light, and I think it also derives from part of your question where you spoke about some have 1.5. If they've reserved 1.5%, great. I think that's really good, because that sort of adds like a insurance fund, right? And I've seen platforms do it. But if that's in our case at least, the 1:1 is what we are talking about, and anything above is always the operationally what is required and what gets generated. So it's I think different platforms have different ways of looking at it, but in the case of WazirX, it is a very straightforward thing that the wallets had these many funds, and there's always a smaller component, which is the excess that gets generated as you operate the platform. I hope that answers the question.
It does to some extent, and at the cost of sounding harsh, I mean, advertisements like these are, can really mislead customers to believing something else than what's true. Like, for example, I am in that position. Reading something like that leads me to believe that you're maintaining a surplus, which is not defined there in that statement. But again, like, thanks for your answer. And so, yeah, those were the questions that I had to ask you. And yeah, thanks.
Thank you, Manvedra.
Thanks,
and guys, we're closing in on 13 minutes, so we've got 1, 2, 3, 4 people here. I think we might leave it at that for entering more people and try and deal with these 4. So Anand, you're unmuted, so do you have a question?
Hello, sir. Hello, Nishal. How are you? Can you listen me? Am I audible?
Yes, sir, you are.
Sir, actually, my question is really technical, and I just want clarification on this Singapore law, or whatever law you are going, pursuing. I mean that we are the users of GenMai, and I really do not understand. Honestly, I'm a finance professional, and I really do not understand that how can you classify a user of a platform or user of a company as a creditor. Just because we were holding some crypto assets, we cannot be called as creditors because we have not invested in your business. We are not, we have not supplied you any services. And WazirX just as a custodian, you cannot, cannot exercise ownership rights over our assets. Suppose there is a theft in a bank, and out of 100 lockers, 45 gets compromised. The bank do not compensate the 45 users with the assets of remaining 55 users. So that's one of my aspect. And second thing, it has already been pointed out that audit report by your, auditors is not at detail. It is not expected from a professional auditor at all, because there are no notes to accounts. It looks like a shell company. I do not want to sound harsh, but that's the reality. And other questions have already been asked. This is like, I'm holding BTC. I'm a long-term holder, and I had conversation with WazirX team last year, and they said that my funds are safe. Now you are just doing that. You are taking my funds, 45 or 50% of my funds, and distributing to other users, just because I was holding on your platform. Before that, I was holding it on blockchain. That was, I had full control over it. But I really do not appreciate it. But still, I want clarification on the law that how you are classifying user as a creditor. And thank you very much. That's it.
Thank you, Anand. The biggest question you have there is, it's your Bitcoin versus your sharing with everybody else. The terms and conditions that everybody subscribed to, and the way that WazirX conducted its business, is that the assets were pulled together and they weren't isolated outside of the 28 million that we referred to from certain law enforcement agencies, where they had specific custody arrangements, and you just described yourself having a different arrangement, a custodial relationship in a different situation. Here, that's not the case, and all creditors' funds were pooled together on the WazirX side, and people did not have specific control features that would give rise to a trust. So whether it was Zatai or Zanmai or any other entity, that is the legal construction here, and that is how we have to deal with this. And we appreciate how upsetting that is and how unfortunate, but that is the legal basis upon which we have to proceed. Is there another part of the question there, George, that I maybe missed? I think that was the key one.
Yeah, thank you very much, sir.
Thank you, Anand. I am sorry for the situation that we're in, but we are doing our best to resolve it. Sudhindra, you have your hand up, sir.
Yeah. Hello. Am I audible?
Yes, you are.
Yeah. Thank you. My holdings are only in BTC. I just want to know if I'm actually stuck with a serious person and a medical emergency. So considering that my tokens were not stolen, would this be a case for me to get an exit from the restructuring with some amount of haircut? Would that be one of the potential options of the restructuring exercise?
Yeah, Sudhindra, thank you for your question. I'm sorry to hear about the medical problems. The answer I just gave Anand is the same as for you, is that it's not your Bitcoin, it's a pooled asset that is shared. And unfortunately, the discount, the 45% discount applies to everybody equally. We are working on trying to create liquidity for you with investors that are happy to buy these claims, and then they would sit there and wait the 6 to 9 months for the distribution that we're talking about. So, and yes, they will offer a discount. We don't know what that is yet, but we're working to generate some liquidity like that for people like you that really need an exit now.
Okay, a quick follow-up questions. Have we officially reached out to Binance to get some kind of a bailout, considering the fact that we had a joint venture in the past? Of course, it has reached a level of litigation, but then have we considered Binance also as one of the potential white knights and have reached out to them officially to secure some kind of a bailout?
Hey, I think I'm not in a position to talk about it, unfortunately. I would have loved to, say everything and anything that's happening at this point in time. Unfortunately, I'm just not allowed to. So I can't answer that.
Okay.
Thank you, Sudhindra. Raghavendra.
Yeah, can you hear me?
Yes.
Okay. So, Nishal, am I needed to file a complaint? I'm an Indian citizen, so am I needed to file a complaint, or is it being filed on behalf of us by WazirX in India?
Look, when the cyber attack happened, within, I think, less than 24 hours or the next day, our India entity filed a complaint, and subsequently an FIR was registered after some time as part of the usual process of how this works. And the authorities are investigating. So, and that was expected for us to do, and we've done that. Now, how does that progress? It's very hard to really put a date or a timeline on how investigation, and it's a sophisticated attack, so it's going to take time. But I think we've been cooperating with the authorities. We've been providing whatever information we have. All these forensic analysis audits that we do, the reports of that. We've been trying to coordinate with authorities, in whatever we can in terms of trying to trace the assets. We've got also third parties tracing the assets. You've got various attempts at I would say basically two things. One is the recovery of the assets. The other is find the cause and the people behind this, who's done this, in whatever way you can. And we are trying to do both of those things. So, but yeah, I think the scale and the complexity, it does take time, and we're just going to try our best. We are not going to give up. It's not like it's done and let's forget it. I don't think the funds, for example, the objective is to keep tracing it so that it's virtually impossible for the culprits to really convert it. But it's a cat and mouse game. The authorities, the people that are working on tracing, they'll be behind this. And I think people often ask, why you're not telling us about it? But a lot of these things cannot be spoken about. You should understand it gives an advantage even to the culprit. And
yes, I understood, Nisha. I think one more question. Am I needed to file a complaint? If I file a complaint for my own security in India, will it affect anything on my side when the restructuring happens or when the dispute is resolved? Sorry to cut you, but
I think,
need to know
this is a
whether-
legal, it's a legal question. I think you should ask someone, who's a legal advisor to you. I don't think I'm the right person to answer that.
Okay. One more thing, one more question. So the Binance dispute is there. So before this dispute has been solved, if we get into restructuring and I get some percentage, 0.5 or 55% or something, and when in case the dispute is resolved, will I be getting more than anything which was part of the hack?
If you mean are you talking about the recovery of the stolen assets?
In case the recovery, or let's say that Binance dispute is resolved and the ownership is resolved, let's say that it goes to Binance. They have some kind of a recovery fund store, right? So will I be liable to that fund, or 55% is what I would get, no matter whether the dispute gets resolved or not?
Look, I think legally, from a legal point of view, I'm not aware of, I don't have an answer to this. It's a good question in terms of, after the restructuring, let's say, a successful restructuring, you get your asset. The question is, the dispute resolves and one of the parties is, the owner. I can't also speak for someone else, anyone. But yeah, I don't think legal point of view, I'm not clear on this. I don't have an answer myself. But I think we'll take note of this, and let us also check with our legal advisor, legal team, to understand. But I get your question. It's more like, what's the next step after we do this? And let us check with our legal team, and we'll probably try to put this across in the FAQ.
And Raghavendra, what we are doing is trying to improve returns with means that we're capable of delivering. A white knight that can help with collaborations and future profits. These are things that we can do outside of that dispute, which we don't have control over.
Okay, so the last question, right? In case the restructuring doesn't go through the Singapore court, can we expect at least some percent, let's say 20% of unhacked asset? Can it be released to us for our own emergency, or because we have so much to cover, right? So can we expect some percentage at least of the unhacked one?
No, we can't pay out an interim dividend or anything until we get a resolution from creditors, because some people are demanding 100 cents. and others are are not. So, and certainly, if the restructuring is not successful, is how you started the question, then there won't be any dividend for quite some time.
Okay, thank you. Thanks, team.
Thank you, sir. George and Nishal, I have to jump off to another call, and then just maybe you can deal with the one remaining question. But
Sure,
thank you all.
Sure, thanks, Jason. Mr. Gupta?
Yeah, hi, can you hear me?
Yeah.
Perfect. I would have liked George to stay back because he made a statement that I wanted a bit of clarity on, but nevertheless, maybe I'll ask that question anyway.
George is
Before
here.
that,
Jason just left.
oh, sorry, Jason. Sorry about that. Okay, anyway,
Go ahead.
so
Yeah.
I'm going to ask the first question to Nishal, which I think a few people have already asked, but I'll ask it in a bit more crude way rather than just trying to disguise with nice words. I understand a hack happened. You have claimed that your systems were not compromised. So a hack is possible either by the systems being compromised or maybe a fault from the users who are handling the systems. So I'm not pointing fingers, but I'm trying to understand how you or your team in Zanmei or Zetai or who are handling the crypto are contributing to liabilities in your personal capacity, not in terms of platform capacity, because I'm sure you'll say that Binance owns the profits and everything, but I can say with certainty that you are not operating the platform as a charity. I'm sure you are taking some salaries, some monetary benefits are going to the employees and the CEO as well. So how are you contributing to the liabilities so that the onus is not only on the users, but also the people who are basically operating the platform? That's question one. So if you can answer that, I'll maybe ask the second question.
I think your question one has, if I were to answer, I'll need to really, check with legal if I can say some of the things I really want to say, honestly. Maybe I've answered parts of this, more straightforward manner. But given the situation, I need to be careful about what I say. So let me just tell you that I need legal advice before I can answer something around this in a very more straightforward or deeper, because what I've answered seems like you want to hear more than that, and I've tried to say what I can.
Sorry to cut you off, Nishal. You have answered from a platform point of view, not.
I've also answered. I think maybe you joined later. So someone did ask me, what are you going to do personally? And I did tell them that there are priorities for us, and the priority
not in
right
terms
now.
of efforts, Nishal. Sorry to cut you again. Not in terms of efforts that you're putting in. I appreciate that.
No. I'm not talking about efforts. I'm not talking about efforts either. So what I'm saying is, I don't have the answer today. Does not mean it's it's never going to be answered. I don't have the mental bandwidth to think about anything but to first get to this first zone. And I like to stay focused on that. And that's what exactly I'm doing. Once we do this is the next step, which is how do you go over and beyond what is necessary legally? And how do you then try to cover up the gap? So the question that you're asking is about what can, maybe I personally do above and beyond for my tribe, my family out here. And that's not, that's not forgotten. That's not something, that we are not going to think about. All of us are going to do it. But I want you to give me some time because that's something that can always be added. And there's time for that. But what we are doing today, where we need all of your support, because that's a decision for me to take on my own. It's more straightforward, more simpler. I need to just put my head together. I'm in a situation today where I want to get this collaborative effort between us done, because this is the most demanded thing. All of these are definitely being asked, but what's the biggest demand today is how do you get to distribution the fastest and in the most legal way possible? And that's exactly what we're trying to do. But I'm not discounting. I'm not saying, we'll never talk about this. I'm also not here to just get things done and be over with. I'm here to make sure that how do we continue to bring more value. So I hear you. Just give me more time. That's my ask on that aspect, because that's something which can be done in isolation. I can decide. Here are things where you and us have to work together, and we need to do this as fast as possible, which is get this scheme through. If all of you believe that this is the fastest way to get to distribution, this is what we want to do first.
No, I
So I
think
don't have all of the
distribution is
answers.
important. I agree. Addressing distribution is important, but by just prioritizing that, you are essentially putting the whole onus on the users in terms of the liability and the loss that happen because of that. And there is no clarity in terms of what essentially the team is contributing to alleviate some of the liabilities of the users. I understand that you're not getting all the profits, but I'm sure you are making some money which you can contribute. It might not be. It's just. I should be more clear. I'm not trying to penalize you for what happened. It's just a gesture from your end so that you can show the support to the community that you are also part of what has happened. Basically, it is also impacting you as a consequence. But that's something that is missing from all the communications that WazirX has done so far. Anyway, I'll leave you to it. Think about it. Maybe some FAQs or something around that would help, at least for the users to understand that you are also part of the situation and not just us.
Yeah, Mr. Gupta, see, I think I hear you. And like I said, it's a work in progress. Look, this is not just the only question, right? We've gotten hundreds and hundreds of questions, and we need to answer all of them, and we need to think about all of them. We've got only limited time, that we can work on, and we're trying our best to do it. And we have to prioritize. We have to prioritize and be based on, what's the most asked, what's the most requested, what's the most expected. And that's how we are prioritizing this. So, but it does not mean that the lesser asked questions or the infrequently asked questions will be ignored or not thought about. We'll get to it. You're saying this, but there's 100 more people or 10,000 more people who have a different ask, which is much more important and which we want to get to. Does not make this less important. It's just that more people are asking for that. So we're going after those things. And then based on that, what you're asking, we'll definitely get to that. I'm not saying we won't.
Yeah, thank you for that, Nishal. But in my personal opinion, this is something that should have been addressed by the team on their own without any user asking for it. I mean,
so that's exactly my point. So even be rest assured, you don't even have to ask for a lot of these things. It's not like we don't know. We also think about these things, but there's a time and place for us also to be able to come forward. There's a lot of things to be solved before we can. And as also, I think, there's also like I said, the time and place. Sometimes it's very hard to say, because sometimes we've tried to say something and then it's suddenly, everyone's like, this is being done for an ulterior motive. This is, this is just showing stuff, and then we have to take a step back. So what we are trying to do first is just to make sure that what is the most asked for, what's the most asked. Let's solve that. Let there be a bit more breathing space, and then when we show these efforts, what we can to further fill the gap, I think that's the right stuff. So it's just about what's first, second, third. But yeah, I think you have a very valid question, and we'll definitely address that. And you don't have to keep asking also. We'll add this. We'll bring it to the FAQ at the right time. We'll talk about it. We've got several ideas. If we hurry up with these kind of things, it might be, let's say, you do X, but can we as a team do X, Y, Z? Can we do more? And we don't get opportunities to keep, adding to it. So we want to properly package it and then come up on what our contributions will be.
Thanks, Nishal. Mr. Gupta, maybe just to sum up, right now we're in the midst of applying to the Singapore Court for a moratorium. This moratorium is a fundamental part of the restructuring, and for that reason, we are putting out FAQs, holding discussion on town halls in aid of the moratorium application. Your question is very much at the top of our minds, and we are actually actively assessing options available to us for this.
I think that was probably the last question. Mr. Gupta, I can still see you. I hope.
Yeah, can you hear me?
Yeah, we can hear you.
Okay, yeah. So
I hope
I
we've
appreciate,
answered.
I appreciate your response, Nishil. So I understand that you need time to basically answer out. Just take that time. I'm not sure whether you were able to hear me earlier because I did not mute myself, but apparently somehow I
okay.
was. But
No,
anyway, I
do
appreciate
you
that.
have
I'll
any
wait for
more?
your response in the FAQs that you're mentioning. But in my opinion, it should have been something that have been answered already. But anyway, my second question was for Jason. That he's not here, but maybe George can answer. Jason mentioned that the terms and conditions that the users have subscribed for to pool the assets and the liability will be distributed in terms of percentage. But I just wanted to understand because I never signed up anything with ZI. I signed up terms and conditions with Sanmay, and I'm not sure whether there was a clause that required me to pool my funds with other users. The problem that I have is because the liability is being distributed in a percentage form, you are essentially penalizing users that have larger balances on the platform compared to ones who do not have, say, large balances. So why is it not being distributed uniformly? Because you're saying that you have some 4.3 million active users. If it is distributed uniformly across all the users in terms of liability, it might be a way lesser amount. So why is not being done that way, and it's being done in a percentage form where large wallets are being impacted more than the small wallets?
Thanks, Mr. Gupta. Let me address that second question of yours first. I think I'd just like to gently correct your understanding of the situation, because what we are doing is ensuring a pro rata distribution based on each creditor's proportion of claims. What this means is that if you're a large wallet, you'll get affected by, effectively at this stage, and these numbers will change, 45%, right? If you're a small wallet, you also get affected by 45%. That's the nature of proportional impact and a proportion of claims being applied to every creditor. So that's the pro rata and equitable way that the impact of the cyber attack is going to be addressed in a restructuring. And then I'll go over to the legal side of why we're doing this with reference to the T's and C's. So the T's and C's, as you correctly pointed out, have Zanmai as the counterparty for the INR deposits and Binance in the T's and C's for the crypto deposits. So and you made reference to no mention being made of pooling. So broadly speaking, the T's and C's do not set out what we call a trust arrangement. And a trust arrangement is in direct contrast to the current arrangement, which is that of an unsecured claim. So, and what key things that are required of a trust arrangement, which is not the case currently, would be things like adequate segregation of user deposits, so they are not pooled with other user deposits, such as in the case of WazirX. Another one would be requiring explicit approvals before the counterparty can deal in these pooled assets, which is not the case here. Effectively, the operational structure and the T's and C's, the legal basis of this arrangement, support the classification of users' crypto deposits as unsecured claims against the WazirX platform. So what this means is that effectively, creditors are unsecured, users are unsecured creditors of the platform upon a deposit of, let's say, a token, let's say 1 BTC. Users can see a 1 BTC number in their platform balances, but the claim they have against the owner of the platform would be the value of 1 BTC, because that 1 BTC goes into a set of pooled wallets, which is according to the operational structure of the business. These deposits are not traceable within the wallets to the individual depositors, basically what the operational structure of WazirX, it greatly resembles the general operational structure of cryptocurrency exchanges, where they use hot wallets, warm wallets, cold wallets, all of which are very much pooled, and as a result don't support a trust arrangement, which leads to the classification of users as unsecured creditors who hold not the tokens, but the value of the tokens as their unsecured claim, which is why under the restructuring, the claims are fixed and denominated in a fiat value, the value of the tokens in the platform balances. Michelle, you look like you want to jump in.
No, I think you answered. The first part of the question was more about, I think, where does ZI come into the picture? And, there's a bit of a background there. But when you sign up, ever since the acquisition that happened in 2019, when you sign up, if you go and check the user agreement or the terms of service on the WazirX platform, it lists out, Binance for crypto and Zanmai for INR. And it's been that way ever since the acquisition. Unfortunately, when the cyber attack happened, and since there is an ongoing dispute, ZI, which actually was the previous owner, had and after the dispute had custodied the crypto with it, and that's where it comes into the picture, and that's why the term contingent creditors is being used. The alternative, yes, if you were to objectively see, is what happens? Do you wait till the dispute is resolved to figure out who the owner of the platform is? But that's going to take a long time, and which is why ZI stepped up and is trying to resolve this, sooner than later. So that's how this is, and I think we've explained this as well. Maybe we'll update the FAQ if it's not specifically detailed out. But yeah, the explanation is more straightforward based on the situation that we are in. Unfortunately, this is the way where we can do this faster, and that's what we are trying to do, the fastest way, because majority of the people want distribution, and while recovery and all of those attempts, everyone understands that we'll continue to work on those. But what's the fastest way to distribute the assets that exist? And that's why we have chosen this path. I think that's about it. We've overshot by 20 minutes. We've tried to take as many questions, but we've got a lot more people who had come forward. Unfortunately, we're short on time, and what you can do is you can send your questions to inquiries@wazirx.com, and we'll try to add those to the FAQs. We'll continue to answer. We understand there's a lot more questions, and it is our objective to make sure that everything is clarified. And wherever there are doubts, even in the distribution, we are trying to simplify the understanding around that. We're trying to also see what we can build into the product, so that you can understand like a before-after kind of thing with your portfolio. In fact, we just started that. The team is trying to now figure out from a product point of view, how do we put across a way for you to choose your the portfolio that you need if the scheme is successful, and that'll give you a better picture. Because we understand, like, we are trying to simplify and explain, but I think practically, if you see it within the app on that, okay, the scheme passes, if we vote for the scheme positively, all of us, the scheme passes, this is the portfolio that we can I can expect. I think that's going to be far more straightforward to understand. So we're trying to put something together within the product for all of you. George, anything else to add?
Nothing else to add. Thank you very much for your kind attention, everyone. Do continue sending your inquiries to inquiries@wazirx.com, and we'll update the FAQs on an ongoing basis to address your most asked questions.